Alright, guys, let me know if I'm audible or not. Let me know if I am audible. Let me know. Audible, alright. Again, guys, make sure that you like the stream as well. There is no background disturbance, right? There's some construction going on. We know there's any disturbance in the back. If there is no disturbance, just alright, cool. Right. Alright, we'll start in like 1 minute. Meanwhile, you can put in your doubts. I'll check out your doubts as well. Also, guys, don't copy my watch list. There are several stocks for several reasons. Don't copy my watch list blindly. I'm not even looking to buy some of them. So don't copy my Indian Bank Nucleus. Nucleus software was a good trade. I was watching it. We're at 1475. That is the entry. This is also tested. A good entry. And the IT stocks are also going up with the results of large cap IT stocks. So this might work out. A good one. Right. Indian Bank. Indian Bank. All right. Not bad. But maybe all other PSU banks are setting up in the same way. So check out something. So see this looks kind of better, all right. All here range bound looks kind of better too. Not exactly very different, but maybe other banks this one also looks better. This is opening up. So maybe you want to already, but other stocks maybe they look a little bit better than. Again, guys, don't copy my watch list. Again, giving disclaimer, don't not buying all of these. Not buying Not even look by some of them. Here for a lot of different. Don't copy all of them. And a lot of stocks which I hold, they are not even on my. So Titan Biotech. Titan Biotech, I am not sure where you bought it, but on. You have already bought it. Okay, so I think we talked about this on this here right here. I remember this way. So I talked about this when it was around this point, somewhere here, I think. Maybe it was a bit extended, I remember. Very good move after that, but now it's gone. If you're holding it, you some of it. Because I have zero expertise in target. I just I just exit my I get a fixed risk to reward, I'm out. I don't know how to set targets for right. Shakti pump. Shakti pump is gone. Gone. It's somewhere here. The only valid entry here. Went right. Right, so this is gone. Again, guys, make sure that you like the stream and you share it with your friends as well. Instagram, when I post a foreign link, only they basically dwarf the reach. So normal story gets maybe 100 views. This one will get probably like 500 views. So make sure that you share the stream well. Right, SBC exports. Right, so I think there was an entry one before yesterday. Yesterday, I just checked this. So this was the entry. Now don't enter. Why? Because this big rejection right here. So this is a very strong supply. So even if your stock goes up, even if it goes up, let's say from the demand it starts to spike up, might stop right here again. Right. So might waste a lot of time. Don't buy this. Right, Rama Steve. Yeah, avoid this. This is the supply right here. Might go up, but it's already up. Um, the demand, see, the demand is coming from this. Right, so demand is actually coming from this candle, right? Right. So, so until this zone is tested, I think you should stay out. See, why do I stress on demand so much? Because uh, let's say you're buying a stock in the middle of nowhere. Say you're buying a stock. Say you're buying a stock here. Okay, the stock is moving. That is good. There's momentum in the stock. But setting your stop loss below the previous low, what you are doing is you are effectively setting it below a lower time frame demand zone. So let's say there is a previous day low. Previous day low is here. Then this is the breakout candle, and you buy at the breakout candle, and you set your stop loss below the previous day low. What you are doing here effectively is you are setting your stop loss at a lower time frame demand zone, right? So this is effectively a lower time frame demand. So this can be taken out very easily, right? Because supply here maybe is higher time frame supply. So if you have to set it below a low, just buy stocks which are bouncing from a daily swing point. So let's say this is a stock, right? Take an example. Instead of buying maybe here, I will just buy it around the previous daily swing. This is much more safe, right? Much more safe. Probably buy somewhere here. Start with buying here. Then you will know how it reacts on the supply. So then you can maybe wait for a proper range and all that stuff, right? This one as well. So instead of buying, let's say, a breakout, maybe buying this breakout right here, just use the previous daily low, buy somewhere here, right? Then you will be the entire move. Maybe if there's a breakout, will still make how much? Let's say you buy somewhere here. The stop loss is below this previous daily one, right? Buy somewhere here, the stop loss is here. Even after a small breakout, make 2.6 hour, right? So setting your stop loss below the previous candle low is the same thing. You are just using a weaker demand, right? You are not doing anything different. Ultimately, that is also a lower time frame. So choose the highest probability areas. You don't want to mess around in lower time frames. Your trade is a swing trade. All right, again, guys who have joined recently, make sure that you like this. How to get into full time trading? I work with someone who is very superior in doing cash trading. So if you're already working, I don't get it. Get into full time trading. Just have enough money. So what I would suggest is if you're good at it, see if you're doing cash trading already, if you're only buying stocks, assume that you will make money only 6 months in a year. Right? You'll only make money 6 months in a year. So and maybe some of these months will be months like this, months, 3 months like this. So if we take an example of a bear market, let's say let's say you want to do full time swing trading, right? So you will get a market like this, right, which will effectively increase your capital uh, very very quickly, right? You will get a market like this. But when this happens, why does the market fall again? Because again, things are overvalued on the bigger time frames. So this is very overvalued on the weekly chart here, right? This will lead to maybe some sort of correction coming along. So you have to be mentally prepared for this. You're doing this full time, right? So and not just this as well, right? So what is going on in this area? Let's just check it out. It's not as bad as you think. Like it obviously looks very bad, but it is not that bad. So obviously, a bear market like this will only come after a big bull market. It was a big bull market right here. Index effectively doubled span of 2 years. So let's say your capital also maybe doubled or maybe went to three. Obviously, if you're not as much as the index, then you need to consider your strategy. But usually, you will make more than the index, right? So let's say you are out of the market on this breakdown, right? So basically, you keep trading. So not like you are holding through the fall here as well, or maybe here as well, or here. But at some point, you will exit and the fall will continue, right? So at some point, you will exit, this fall will continue. So what happens after that? So let's say you exit here, the fall continues. This time it did not go above the EMA, did not set up like this, so you cannot buy anymore, right? Fall continues here. So how does the index fall? The index does not fall one way like this, all right? Does not keep falling for 6 months in a straight line. The bigger falls, these falls will end in 1 or 2 weeks, all right? 1 or 2 weeks, it will be over in 1 or 2 weeks. After that, there will be a period of consolidation where the stocks will outperform. So this period right here, maybe a bit of this period as well. Obviously, this is a continuous fall. Don't try to get into this, but as soon as there is a break, there is this period where stocks will outperform as well. So at a stretch, you maybe you will get 2 3 months where you will not make any money, right? But if you and this is a very sharp bear market. I'm not even talking about a bull market or anything because The bull market, obviously, its corrections are short-lived and the rally is long-lived. See, all these corrections, they happen and then we happen, resume again, they happen. So, so what happens here? You won't make money every single month or every single week. Week is way too less. I think even month is way too less. So the point is, you have to understand that stocks might not move like this. Some stocks might be breaking out here as well. Might end up actually making money in a bear market as well if you are cutting out on time, cutting out your losses on time. So let's take a few examples of February 18th, May 18. Right, let's just discuss about it for some that people can learn as well. What happens in real time. So February 18 to sometime May. This is falling. So these stocks are already out. They have to go through a bit of. All right. So obviously, large cap stocks are going up this time. So if you're trending up throughout the small cap bear market, so you have to recognize these spots in the market where you can still make money, and then you might be able to withstand the bear market as well because all sectors don't go through a fall all the time. So you so going up during this same period. February there is a fall, but the index recovers just to the previous supply, but the stock is recovering all the way back up. Look at this. The stock is still going up here, so this is a trade probably you can take. Stock is still going up, meanwhile the index is getting destroyed here, right? So you can recognize these areas in the market. You might be able to make money when the market is very bad as well, but again, uh, you have to be okay with the fact that might not a bear market, right? So full time trading, it's not that difficult. You have enough capital because the charges on uh, swing trading is also very less. All right. So compared to my PNL, the last year I've probably only given about maybe about 4 to 5% of my PNL as charges. That is it, right? Because you're not taking trades. One trade you're taking is going on for 1 month, right? You're making 30% on the stock. So that that the PNL which you make compared to the charges that you will give out is very very less, and that is a big advantage if you can do it consistently. Second thing is that the taxes are also less. So in swing trading, you are only giving the short-term capital gain, right? You are not giving uh, business or income tax. So many advantages if you can do it properly. I think swing trading is a great option, but you have to be very good at it. You have to be comfortable with money. So maybe go through a 6 month bear market before you decide to. Right. What do you do in these times trying to build up a See, this is the problem. You don't have to do anything. Just sit out. Why do you have to do? The point is, see what will happen. I'll tell you. You try to trade both sides. If any of you guys try to trade both sides, by the time the index recovers from a bear market, so let's say you are shorting the index here, right? You're trying to trade both sides. What will happen is you won't be comfortable in taking longs until the index breaks through this point where you have shorted it. So it's a psychological thing. So when you can clearly see index is trying to go up here, you will not be able to take longs stocks here, right? And then after the index breaks out, then you will be like, okay, so it has already gone up so much. Let me wait for the pullback, right? The pullback never happens, and now you have missed this entire rally. So don't try to trade both sides, right? You will end up not making money in either side. right? And I'm speaking, and I'm saying this from experience. Stick to one side, stick to the long side if you're buying stock. So, so yeah, stick to the long side. Don't trade both sides. For 2 years, and that principle is working. Just the basic. It's just how stocks move. Uh, just demand, supply, and some price action. You keep obviously I keep a strict SL in swing. How can you trade without an SL? Don't trade without a stop loss. Even in a bad market, stocks won't work out. Even in a good market. So look at this example. This is how this stock. Okay. This is how this stock is moving in a generational bull market. Don't hold poor stocks. The only good stock is the one that is going up. Right? So don't hold these stocks. Time. Your capital will be stuck. That is the main point. You will waste your time. How do you allot capital? Just normal trading risk. Allot it according to your risk. So if I'm taking this trade, if I'm buying it here, my stop loss is here. I don't want to lose more than 1.5%, so I'll allot my capital. Normal position sizing, nothing. In trading is not something special. The good time to enter, no, don't enter Maharashtra. Right. Bajaj Finance, us fertilizers. Let's have a look at fertilizers. They're bullish, but I think they have kind of gone up a lot. The weaker one, though. Again, fertilizers, all of them look extended to me. Don't buy them. So again, all of these stocks have already gone up. Right? This is an extended sector in the market. So again, you look at all of these stocks, they have already gone up in the last 2 months. Don't buy these stocks. Get any stocks. All of these stocks have gone up a lot. So you're entering in an extended sector. How do you control portions? There are a lot of stocks which have exited early. Enter. So if you're going through all this, I don't think you should be doing full-time trading. Buy a stock, hold it. If it does not move, exit it. If it moves, book your profit. No emotion here. I want see. I want to miss out on trades. I have said this multiple times. I don't know said it in public or not. I want to miss out on several trades every single week, right? Because it means that everything in the market is going up. So whatever I buy, that is also probably going, right? So I want to be in an environment where I see stocks going up left and right, because that increases my probability of taking a trade, of catching a big. If you want to be the uh, only guy who's taking the best trade, or if you want to buy the only stock that is going up, your stock won't go up because nothing else is going up. It's not the market where stocks are going up, right? So I want to be that guy who's missing out on trades. The entire watch list is full of stocks going up. Maybe even if I haven't bought them, all right. So get out of this missing out on the trade, all this and that. A stock is only as good as its name. So I don't care if everything is going up and I cannot buy everything. I want to be in that scenario. So I don't even remember the name of the stock after I sell it. So if I sell something today, maybe 2 days later, I won't probably remember that I've right. So look at the chart, be very objective about it. It doesn't matter what the stock is doing. I've sold many stocks which have gone up even more than double than where I sold them. So I sold this stock. I bought this stock somewhere here. I sold it somewhere here, and on the next day itself, it went up as much as the money which I had made. So doesn't matter. You take what you want, get out of it. You just go on to the next. Right? Taking multiple trades. How do you got it? Equal position sizing. No, equal position sizing. Right? Equal risk. Not equal position sizing. Equal risk. So all my trades are the same risk because that is the only thing you can control. No, see, you cannot judge a setup that it looks better uh, when everything is going up in the market. Right? You just play in with equal risk. So yeah, don't mess with your risk. So if you're risking 1% in one stock, risk 1% in 10 stocks. Just by looking at the chart, you cannot say that this will move more. I should risk doing that. Something that will make difference. Maybe probably might be counterproductive as well. Also, sorry. So what might happen is um, you might not be able to trade the stock where you have more size. So goes up a bit, comes down, and you're like, I should sell it now. Then maybe goes up again after you've sold it. So a lot of emotions come into play. Fear is constant across all stocks. Don't um, don't mess with your security as it doesn't feel bad anymore. Personal problem. It's all right. It doesn't matter in the long run. In the long run, all these things will win out. The only thing that will matter is if you stuck to your rules or not. Right. So all these target you exit maybe early in the stock and it goes up. It's all right. You will maybe later on you will hold something which will also go up. That will even out. Maybe buy something which is and it is almost at your target. Next day it goes up 20%. Just opens gap up 15. So these things will happen over time. If you have a long career ahead of you, it will happen in 10, 15 years. These things win out. Right? The only thing matters is if you cut out on time, you are able to save yourself from these big falls, which are the big downs. You right? These things will matter. So all the rest of the stuff they will be evened out. Sometimes it will be in your favor. Sometimes you might think you've done it early. All these things they don't matter at all. Did you find? So I just have one watch list which has all the stocks above 1,000. I go through them annually. Don't I don't use any screen. I like to see. Also going through them manually. I've talked about it earlier as well. Helps me with uh, knowing what is going on in the market. So right now, 10 minutes ago, I talked about fertilizers. So I went through like 5 or 6 fertilizer stocks. All of them had already gone. So now I don't need to look at any fertilizer stock. Know what is exactly going on in the fertilizer space. Right? So go through them. Right. The railway stocks were also setting up here. All railway stocks are setting. So that will give you more confidence to maybe enter a trade or hold a trade. Go through them manually. Right. If you let a screener dictate you, uh, the stocks might not go. So again, see this going up was the strongest structure on the PSU banks. It's already here. Rest of the PSU banks were somewhere around this point, right? So now it's breaking out. So go through certain stocks, you see what is going on. See, bank was also strong. This is also breaking up. So now my memory, I know which two stocks are strong. But if I use the screener, I would never come across this stock because this is, if I set up a screener according to this, I would never see this, right? So don't find a shortcut, right? Get a list, go through every stock. See, this was the weaker one. So it hasn't broken out yet. So now these things will stick with you. Next time there's a pullback, this might break down, but Union Bank will not. It will probably come back to demand, and then I will buy, definitely. I'll buy Union Bank of India right here, right? So another thing is, I talked about Canara Bank. Multiple times it was much stronger, right, than maybe something like a Bank of Baroda. Sure, Canara Bank has also gone up because everything is. But see, SBI was also weaker, so I know SBI is weak. So I don't now I don't need to waste my time looking at SBI, or I won't be in a place where I don't know anything about PSU. Right, I went to all of them in front of you. Now I know exactly what is. So go through them manually. Don't rely on screeners. Right, cement stocks, specific stocks will take the next live. Let's talk about the first sectoral analysis. So talk about cement sector. All right. So again, I think cement is also extended. This is up. This is up. Maybe cement is in a pullback phase. Some stocks are pulling back. It's also pulling back. So all cement stocks, they are kind of pulling back. Mostly cement, I think this is going up, but again, this is extended. So again, kind of pulling back. It's also extended. So I think cement stocks have also moved up the uh, past month or so. And obviously, a lot of cement stocks have already broken out. I'll give you one example, probably tell you when to buy a sector. So look at this point. Right. All paper stocks broke out around the same time. An example of tire was starting to break out around 90, right? Same thing here. The same exact 1450 setting up, breaking out on 18 that week. It was already same exact week. Right? Up move, break out after that. Don't have to be some sort of astrologer to know sector is going to move. Just look at the charts. They will set up together. Same point here. Sure, not something I would have bought, but again, this paper, okay, again, same time, right? Right? The sector was tires. Can you see big up move in tires? You can mark the breakup. So again, April was the breakout in polo tires, and here is also a breakout. MRF was same time, April, where it started to go. So sectoral moves happen together. You have to just spend time with the charts. You will find these sectoral moves. Everything is right in front of you, right? So focus on sectors, go through stocks one by one. Don't no, don't cut on effort. Alright, media stocks, media stock. So, media index. So I talked about the media index. I think we're here. They have been going up, but there is a bit of sideways move because of, but other media stocks they have been well. Big breakout here, set up here, big breakout like a T. Again, big setup, big breakout. So I had posted about this on my story as well on Instagram. And this was weaker, so no need to buy this. See this down, no need to buy this. So all these things they will set up together. So if you're holding any media stocks, exit now. Maybe hold, maybe exit half or something. Again, it's a very big move. A small, 50% move. How much? Matter of 5 days. So this was setting up. When I posted it, these media stocks were actually somewhere here. What happened after that? They set up properly. Then so focus on the sectoral moves. You definitely catch some big. Also, they fall together as well. You saw the chemical sector last year got destroyed because, but they were just falling together. Don't need to know why and the time in. Let's take a last talk. Then we'll conclude the live. We've talked a lot of sectors. So focus on those sectors. One has already gone. And like, yeah, and talked about this big breakout, 20% breakout. IT stocks have already gone up. Techs have already uptrending. How it is high also. So at this point, see, look at how far it is from the base and how close it is. Not a not a point where I want to. Maybe if it pulls back, forms a base, all that stuff happens. I'll buy it. But point. Axelia Solutions again, it has gone up, but there was no end. I'm not sure why. One of that is cool. Maybe some higher time frame. What will happen to this uptrending? All right, so we will stop here. Hope you guys learned something. So that you like this, share it with them. We'll meet